Hi. Macquarie had arranged an investor meet with the top management of HDFC Bank, and I'll share the key highlights. It was an investor meet with the MD and CEO as well as the CFO, and management did share the impact of the COVID second wave. Management did state that the near-term delinquencies are likely to rise, but the overall losses will be contained in the second COVID wave. April 2021 did see rise in the check bounce rates. However, in May, the bounce rates have normalized. The impact on the supply chain in the second wave is not as much as in the first wave. However, yes, the second wave has certainly impacted the rural areas more this time. So far, the SME as well as the corporate book is holding up well for the bank, and they are still expecting higher delinquencies in the retail book. They're expecting higher delinquencies in the book which was restructured as well as from the book that had taken moratorium last time. However, management does believe that the NPLs will just be a timing issue and eventual losses would still be low. In fact, on the entire technology related issues that they had faced in the recent past, especially post the outage in December 2020, RBI of course had put in certain restrictions, but management stated that they are on track to implement the various deliverables. They've already submitted the audit report to Reserve Bank of India, and they're awaiting approval from the RBI. They're working on a war footing to improve the overall technology recovery systems as well as the overall user experience, and also they're working to improve the user interface with PayZapp, Smart Buy platforms, and in fact they would be relaunching them. They're ensuring that the systems can be decoupled, and they are building resilience to ensure that recovery is faster even in an event of an outage. They're confident that the inability to launch credit cards will not impact profitability, and they have already migrated their applications to a cloud-based architecture. They've already moved to a new data center during the pandemic. So yes, they're taking a lot of initiatives to improve on their overall technology related issues and to improve on the recovery systems as well as user experience. In terms of the competition from fintechs as well as the buy now pay later companies, management stated that the bank believes that partnerships are the key for holding their forte, and they have already tied up and they're tying up more with newer players to offer their products. In terms of the recent organization change, management stated that the main purpose was to bring those who are second in the hierarchy in the management line to the fore and give them leadership responsibilities. This will encourage the pyramid below to work and contribute better, as they will have a fairly well defined career path and plan in the organization. So as such, fairly a lot of positive takeaways coming, especially on the technology issues. But yes, NPLs would need to be monitored. HDFC Bank is not expecting too much of a hit. Macquarie states that HDFC Bank is one of the top picks in the financial space. The stock is trading at 2.8x price to book value, and this is nearly a 15 to 20% discount to its historical averages. The tech related issues, according to Macquarie, are a blip in the overall functioning of the bank, and bank continues to be in a strong footing to grab market share and also to deliver high profitability. In fact, Macquarie states that they would encourage investors to add to the stock at the current levels.